I'm joined by Mitul Kotecha. He's Global Head of Forex Strategy at Credit Agricole CIB. Mitul, good morning. Thank you for joining us today.
Good morning.
Mitul, the yen initially rose on the back of events on Friday, but since the announcements by the BOJ, it's fallen back a little bit. Would you expect a need from the central bank to sell yen, to stop it strengthening from here?
Well, I think the key level that many people are looking at, Mark, is 80 on dollar yen. If dollar yen is showing signs of breaching that level and moving below, then I think there is a considerable risk of intervention. I think the Japanese authorities do not want to see a stronger yen at a time when they are trying to cushion the economic impact of the earthquake and tsunami. So I think it will be very important. I think that's one of the reasons why dollar yen is higher. But again, I think given past experience in terms of the Japanese economy and market, there's a lot of fear or expectation perhaps that there'll be a repeat of the Kobe impact on the yen, the Kobe earthquake impact in 1995, where dollar yen dropped by about 18% in the 3 months following the earthquake.
I mean, the economy, as we know, Mitul, contracted in the fourth quarter. It seems sensible to project a contraction in the current quarter, but thereby a V-shaped recovery should take hold. Is that how you're forecasting events in coming quarters when it comes to the economic impact?
I think that's a fair assessment. We probably will see a negative quarter in Q1. But again, our economists are looking for a bounce back. You've got to bear in mind there's going to be a huge construction effort in the coming quarters. Of course, there will be a lot of damage still in the next few weeks and months to assess. But that V-shape profile is probably about right. But nonetheless, we're still looking at economic growth to fall or to be negatively impacted by in the region of 1% or more as a consequence of the damage from the earthquake and tsunami.
A lot's been made of political risk in global markets now, Mitul, not just because of the weekend's events in Japan, but because of events in the Middle East, specifically Libya. Throw into the mix the sovereign debt crisis in Europe. Are investors becoming more risk averse? Is this latest crisis in Japan, does it have the propensity to scare away investors, to knock the global economy?
Well, I think the reality is that a lot of the damage is localized in the Japanese economy. Of course, it's huge and it will have knock-on impact. But when we look at even across Asia Pacific, some of the worst fears, of course, have not panned out. There is a risk-averse environment. As you say, there are many factors at the moment, including Middle East and European tensions, etc. But I think this is a Japanese phenomenon. I think what's going to happen clearly is the risk of repatriation as Japanese life insurance companies repatriate capital back to Japan to fund these liabilities. There may be some foreign selling of Japanese assets, but I think the repatriation story could be even bigger. But I don't think this will lead to a bout of global risk aversion. Of course, it's an unfolding event and it's very fluid, and of course you've got the nuclear issues and potential for further earthquakes, so it's still not finished, the story.
And of course the Bank of Japan pumping a record amount of money into the economy, buying bonds. It might actually create some inflation, which in the case of Japan wouldn't necessarily be a bad thing, would it?
Well, I think that's absolutely right. There is probably going to be a higher or less deflation, or maybe even higher inflation readings because of the impact of the damage of the earthquakes. And I think the pumping in of liquidity, of course, it's a fair thing to do. The economy needs to be cushioned, and that, along with further fiscal measures, will help to cushion some of the negative economic impact and may help inflation.
Mitul, thanks a lot. We'll speak to you soon. Mitul Kotecha there from Credit Agricole CIB.